Hello, Gary. Thank you for being here with us. This is, for all of you that don't know him, this is Gary. He's an expert on residential mortgage, special for waterfront condos in Miami Beach and North Bay Village. Gary, thank you for being here with us with the South Florida Investment Show. Gary, I'm going to ask you a few questions because, lately we've been having a lot of problems when it comes to financing in this type of condos. The first question is, how long have you been doing residential mortgage?
Sure, absolutely. I've started in the business in 1990, so I've been lending in the community of Miami Beach, North Bay Village since 1990, so 27 years.
27 years?
Absolutely. And then, of course, being here with Family America Mortgage, we started in 1998.
Okay.
And have been serving in all the communities as well.
All right. How long have you been doing waterfront condominium? How long have you been doing residential loans for waterfront condos?
Absolutely. Since the beginning of the time that I started lending here locally, we've been lending in the community of North Bay Village, Miami Beach, and throughout the rest of the county, and lending in condos. The condo market has changed a lot over the years, and so people that are new to lending may not be familiar with a lot of the changes and how things have evolved, and to find the proper techniques to make sure we get borrowers into homes and into new condos.
Okay, and can you be more specific and explain us, because I mean most of my clients, they like to know, what is the difference between a residential loan for a single family home and a residential loan for a condominium? What are the differences? Why condominiums is so hard?
Right. Well, the primary reason that the condos pose risk to lenders is that there's an association involved, where someone who's buying a single family home or a townhome, it's a much simpler process. But when it comes to condos, the lenders have to vet and check all the finances, all of the legal actions, all of the situations that are specific to condominiums that could affect the lender. So the rules for lending in condos is a lot more sophisticated, and the ways to maneuver through that need somebody who's savvy and knows exactly how to get through those, and have lenders at their fingertips who can are used to and want to lend in those areas, because many lenders don't want to.
Yeah, that's correct. So what I'm getting from this answer is enough, because you gotta excuse me. So you mean that the association is part of the property when it comes to when the lender has to value the property, the association becomes part of the property. So if that association is not in good standard, it's going to be a no for the lender.
Absolutely, and since the financial crisis in 2008, the condo market has changed dramatically, because so many of the condominiums, there were so many foreclosures, so the associations weren't generating enough revenue to sustain their buildings and keep them up to the proper standards. So the finances have been slow to come back. Some have recovered, many have not. And so that is a big part of it. Sometimes if there's a legal action, whether the condo association is being sued or they are suing, it can be an issue.
It could be an issue.
There are ways to maneuver through some of that too, depending on the type of legal action. But also some of the other issues that condominiums can be negatively affecting a potential purchaser would be for somebody that owns too many units within one condominium.
Yeah, we have a few cases like that.
Exactly. Or too many rental properties are existent within one condominium as a percentage of the total amount of units.
What's the percentage of the rental ratios?
Well, generally speaking, if it's an owner-occupied property, there's a lot more flexibility.
Okay.
To get maximum financing, to be able to get higher than most to 90 or 95%, you need to have at least 50% of the units be owner-occupied to get the maximum financing. That is, of course, depending upon the association. If they have deficiencies, then you're going to need that percentage. But if the condo is in tip-top shape financially and meets all the Fannie Mae standards, then we can still get 95% financing, regardless of the percentage. So there's a lot of variations and things that can affect the outcome.
Yeah, but what I heard, from all the clients is that the very few buildings in Miami-Dade County that will qualify for Fannie Mae and FHA financing. Is that correct?
Yeah, that's correct. Number one, the choices that are available to home buyers in the market are very, very slim. You have FHA financing, you have conventional financing, and VA if you're a veteran. The FHA, I just checked this morning, there's only out of Miami-Dade County and only one in Miami Beach that is FHA approved. So if someone's needing to be a first-time home buyer, wants to get FHA financing,
They want to take advantage of the.
and take advantage of the easy underwriting, then there's very few choices on FHA.
This is very important that you say that. Only one condominium, only one building in Miami Beach, it is FHA approved.
That's correct.
That's how worse, how bad the conditions are. Because the problem is also most of the condos in Miami Beach are owners that don't occupy the condo 100% of the time, and most of the time they rent it out. So that would be a non-owner occupied condo.
Exactly. And FHA financing is primarily for purchases and owner occupies. They don't lend investment properties as well. So the conventional side will consider any condo. But then again, for a first-time home buyer who's trying to buy a house, or even a savvy buyer who's bought before, these condo issues can affect the amount of your down payment that you're going to end up putting. You know, the minimum down payment of 3 or 5% is not existent in a lot of these condos if they have one little minor issue that doesn't meet Fannie Mae requirements.
Of course.
Then you're going to default to having to put 25% down to avoid the lenders willing to take on the risk. If you put that much skin in the game and put that much down payment, then it can be bypassed. But a lot of people don't have 25% to put down.
Most of them don't have 25%.
So that's the disadvantage. And working with a lender that knows the ins and outs, and also the agent who's familiar with it as well.
With the area, yes. And also, Gary, because I get this a lot from my clients, I mean, they go to one of the major financial institutions, Chase, Bank of America, they're planning to get a loan with the bank, and they say, well, they say yes, that they will be able to do it. 30 days later, they call me and they say, well, we can't finance your loan because of the building. What happened with this big financial institution, Bank of America, Chase, Wells Fargo, Citibank? Why is that?
Yeah, well, the biggest thing with the banks is that they're into the relationship banking. They want to attract deposits, and people with a large amount of deposits, they're going to cater to a little bit more than they would just the average Joe who doesn't have a lot of funds to deposit in the bank. And so since the financial crisis, a lot of these big banks have been punished by the government, fined heavily, so their mortgage lending has been scaled back, and so they basically are taking off just the cream of the crop, at the very top, the highest credit scores. And even still, even if you meet those requirements and you have a lot of money in their bank, if the condo doesn't meet the Fannie Mae requirements, they're still going to have to deny that borrower because they're not taking on much risk these days.
So that means any of these major institutions that will sell their loans to Fannie Mae and Freddie Mac would not be able to lend in Miami Beach and North Village.
Right. And the majority of what we see is the people that come to us sometimes have tried, and then they've already been rejected by the big banks or someone that they felt like they had a close relationship to because they just didn't want to lend on the condos.
And it's important that they know this, because the problem is when you put an offer on a condo, you know, they don't tell you no right away. So when you put an offer on a condo, you have to invest money in appraisal. You have to invest money on doing an inspection for the property.
Exactly.
So the problem is 30 days later, the bank is denying you, and the seller doesn't want to give you an extension. So you have a problem there. You waste your time. So, Gary, you're telling me that most of these major lenders will sell their loans to Fannie Mae and Freddie Mac. That's why they cannot lend in Miami Beach and over there.
That's correct, exactly. Even though they are portfolio lenders, they're just not. They don't hold on to too many loans, so the rest of them they have to sell. And of course, they're not wanting to have the backlash of having to buy back those loans.
So it doesn't matter how much does the borrower money have in the bank. How long have they been banking with the bank?
Exactly.
It really that doesn't matter, right?
Exactly.
Because that's what I get from my buyers and sellers. Well, I've been banking with Bank of America for 10 years. I have a lot of money in my banks. All my savings are there. I don't think they will have a problem lending money to me.
Right.
And I find out with the time that is incorrect.
Yeah. And many times some of the buyers that do start off with their large bank like Bank of America, Chase, they'll go through the long process of spending money for an appraisal, pay for different home inspections, and only to find out maybe 30 or 60 days later, after the contract is ready to expire, that they can't do the loan. Whereas other lenders like our company, we're familiar with many of the condos in the North Bay Village area. We've already vetted them, so we can quickly make a clear decision to say, hey, this is going to work or it's not going to work right in the beginning of the process.
Before you even make an offer.
Exactly.
Before you even make an offer. This is important. You got to see a financial institution before you even make an offer. One more question for you, Gary, because I know your time is important. I hope I'm not taking much of your time.
Okay.
What are some of the programs that will be available for this type of condos that are now Fannie Mae and Freddie Mac approved?
Yeah. Well, to give some examples, if there's a condo that meets all the requirements, such as the 360 condo in North Bay Village,
yes.
That's a condominium where we can get maximum financing up to 97%.
97%? Yeah,
exactly.
That's
and so it meets all the requirements of Fannie Mae, so it's easy to deal with. Whereas on the other hand, Grandview Palace, that is one where, because of some number of owners in the building, which is not a negative thing, it just happens that one person owns several units. You're going to have to be able to put 25% down to purchase a condo in that building. There are some other programs we can do a second mortgage to get you up to 90%, where you only have to put 10%.
10% down.
But there's certain requirements that we have to meet to pre-qualify them to make sure that they can qualify for that.
Would this apply for investor or only primary or secondary
This
home?
is only for buying as a owner-occupied primary residence.
Okay, or second home.
Or
Could it be a
second
second home?
Or second home, exactly.
So you mean that in a building, for example, like Grandview Palace, 25% down or 10% down would be what a primary residence secondary home, not investment.
Exactly.
And just because of that fact that the one owner owns more than 10% of the units.
Exactly, and you won't find that some of the big banks won't even do it with 25% down.
One of the big bank. That's correct.
Yeah.
So what would be your advice to a prospect buyer that is looking to buy a condo in Miami Beach or North Bay Village, waterfront condo?
Right. Well, one thing, taking a step back and just for all potential buyers, you want to definitely make sure that you have funds in your bank account. You don't want to be putting in money into your accounts at the last minute, because the underwriters are always going to ask for documentation to make sure that the funds have been in your account. Cash deposits won't be accepted or allowed. So you want to make sure that you have funds in the account, or a family member who's going to provide you with some gift funds. That's the first thing. Second thing is, get pre-qualified first. Make sure that you're dealing with a lender that knows the area in which you're buying, working with an agent that knows the condominiums specifically. And so some of these issues that can be dealt with up front are dealt with and are understood right away, so that you're not strung out by some of the big banks. That's the biggest part. Get pre-approved by somebody who knows the area locally.
Someone that is able to lend in the area.
Exactly.
If you go into a building, well, I like this building, I like the location of the building. What are the lenders that are actually lending on the building? That's what I tell people. Because, most of the buyers, they want to start looking at units.
Yeah.
And I tell them, listen, you are going to get tired of seeing units. The first thing is get pre-approved for a lender that's going to be able to qualify this building.
And you can ask them too. Ask them, have you ever lent in this building? Are you familiar with this? And if there's any hesitation at all, and there shouldn't be, if they're using the right lenders that know the area very well, then that should be a red flag to maybe look somewhere else.
Yeah, they will be able to tell you no from the beginning. I tell most of my buyers and sellers, listen, this is a no. If you don't have 10% down and your credit score is this high, you cannot get a loan on this building.
Exactly.
And that avoid wasting your time going through the whole process of buying a unit and then getting denied after 30 days. It's very frustrating.
True.
Now, Gary, what would be your advice to a seller that is planning to put his unit on the market?
Right.
What would be your advice before he even start on the process?
Yeah, you have to have realistic expectations. The cash buyers that were here the last 10 years and have really fizzled out, and there's really not many, so you can't expect that you're going to find that. That would be a great scenario. But secondly, know your building. Understand your building. What you thought was your building when you bought it may not be the case today.
That's true.
You should be in contact with your board of your association board. Yeah. Is there any legal action? Know if there's something that's currently pending. Find out from them, which lenders have been lending on these particular condos. So that way, if someone submits you an offer and you're going to receive a pre-approval letter, you'll know if that lender is one that has already lent in the building at that point.
I think that's very important, because it's before you start the journey of selling your property, your unit, it's very important to know the financial situation of the building.
Exactly.
Whether either you're going to proceed with, because remember, if you limit it only to cash offer, I mean, you're gonna have less traffic on the unit, and you're gonna have less offer. But if you can able to find out the lenders that are financing in the building,
Absolutely.
you can better address your prospect buyer. They say, I know you've been, and if you have been pre-approved with Chase or Wells Fargo, eventually you're going to be able to be pre-approved with this other lender. It's just the matter of selecting the right lender when you are buying, or selecting the right lender for your buyer. Exactly. So one more question, Gary, before I let you go, is if you are a seller and you are selling your unit in Norway Village, Miami Beach, what would be something that you would evaluate and would take in consideration before you accept an offer from a prospect buyer? What would be something that you would look at it?
Yeah, well, if I was a seller, I wouldn't hesitate to pick up the phone and talk to the lender that was presenting the buyer's financing and ask them, hey, have you lent in this area? That way it's going to give the seller a lot more confidence to know that their deal is not going to waste their time for the next 30 or 45 days and have it fall through. So it's being that our company, we're familiar with all these condos in the area, we can confidently say if we're going to be able to close or not. And we're not going to have any issues that come up as a result of the condo itself. That the large banks might come back with late in the process.
That's correct. I mean, that's what happened because we were speaking earlier about the buyer's waste of time, but it's also a waste of time for the seller. Because remember, you're going on the contract with buyer A and you're not able to get on the contract with any other buyer, and finds out that you waste 30 days of this process. You don't waste any money, but you lose traffic on your unit for 30 days.
And especially if the seller is buying somewhere else and counting on the sale of this property, you don't want to ruin your opportunity to purchase the other property for this deal falling through. So just because the condo wasn't vetted properly by the lender.
Guys, pay attention to all these answers because this is very important. We have Gary here. Gary, thank you so much for being here. Okay, you can look for his contact information and my contact information on the bottom of this video. Thank you so much for being with us. Gary, thank you so much.
All right.
And I hope I can interview you in the near future.
Anytime.
Thank you, Gary.
All right.
Stop.